That seems like quite a huge chunk of change right there that you mentioned. I mean, that's a lot of money that's leaving the U.S. So,
yes.
When you say the policies, what are you referring to?
Okay. Well, first of all, it's just like a person who overspends and is always in debt and is always in trouble with the credit card company. That's the U.S. right now. And what we've decided to do is we're going to spend our way out of this debt. Now, that's okay if the money is spent wisely, but it's pretty clear that we're just spending like gangbusters and we're passing bills without reading them and all kinds of crazy things.
So-called money,
just
fake money.
Pumping monopoly money into the system. And I don't think there's any good ending to that story. I mean, when you line that up, I don't think there's any positive spin that you can put on that. That's what's happening in this country. Now, the thing is, other countries are taking note, and they're nervous. China, for the first time in my memory, is basically saying that they're nervous about the U.S. dollar. Would someone please ensure that this currency is going to maintain its stability? And the Europeans, Trichet is begging. He's begging the U.S. to come out in support of a strong dollar. And, yeah, you know, Geithner and Bernanke have said a few things, basically with a gun to their head. You know, yeah, we support a strong dollar. Nobody believes it. Nobody believes it. The policies don't reflect it. Okay, so it looks like a one-way trade because, first of all, the other countries are very nervous about U.S. policies, U.S. spending, U.S. debt, and the ability to pay it back. And the U.S. itself doesn't seem particularly worried about this weak dollar. It seems like it's a back burner issue here in the U.S. So when you add all that together, it's kind of hard to like the dollar.
Now, we just saw that headline in a news story that the U.S. is criticizing China, or U.S. Treasuries, or something like that.
I saw the headline. I didn't get the whole story, though.
We just saw somebody's criticizing China that shouldn't be.
Yeah, well, you know, let's see how hard we can bite the hand that feeds us, right? You know, so the China buys all these U.S. Treasuries, which are basically loans. When we sell U.S. Treasuries from the U.S., we are borrowing money. And so let's take that person who keeps lending us money and let's just bite that hand that feeds us. Now, I don't know the context of the comments, so I can't really go beyond that. But I'd basically say this, that we're basically like some people would compare to an alcoholic. Like we're basically, with our spending, we're out of control. Others would say that the relationship between China and the U.S. is like a bad marriage, and we're the spouse who won't stop spending, the United States. However,
China's our sugar daddy.
China's the sugar daddy or sugar mama. Let's not discriminate.
Yeah, no, you're right.
Okay,
you're right. Absolutely.
And China's nervous about it, right? But on the other hand, China's in a situation that if they divorce us, then they're really in trouble because we're their best customer. So they're kind of stuck with us till death do us part, right? And that's the story with China. So it is not a good situation. It's not a pretty situation, but they're kind of stuck with the U.S.
I mean, that's going to hit traders that are paying attention to this psychologically pretty hard because no matter what you're trading in the short term, you always have this in the back of your mind. But the bigger story, is that on your mind every day that you start trading? Yeah,
that's the context in which I view things. My little view of the world is that, I'm viewing everything within that prism. So when I see the dollar getting stronger, I don't think, oh, let's buy dollars. I think, let's get ready to short dollars. And so far, that's paid off quite nicely. Especially, let's short dollars against commodity currencies because, let's face it, why would we want to buy the British pound or the U.S. dollar when those economies are so heavily involved in banking and finance, which are just horrible areas to be in right now? Why not focus on countries that produce gold and copper and iron ore and coal and things like that? That's where the business is, and since those things are valued in U.S. dollars, if the dollar falls, it'll be that much sweeter for the commodity currencies. So far, it's been great. I don't see any changes. I don't see any reason to pull my bullhorns in on that one.
And then just to open up the floor to you to give advice to a lot of the individual traders watching, what do you say, or what currency pairs can provide the most volatility, some opportunities, some ways to cover themselves? Okay,
pound yen probably provides, out of the major pairs that I trade, pound yen provides probably the most volatility. However, it's probably not a great pair to trade right now. You see, I don't like the British pound very much, especially after today's rally. I think it was basically short covering. I don't think it's going to last. But I don't like the yen that much either, because we know that if the yen gets much stronger, there's a chance that the Japanese may intervene. So really, I can't see any trade there, even though perhaps it's rallied today. I think it rallied about 500 pips today.
And then Fuji will come out and he'll say something about...
It might be a short-term short. It might be a short-term short just to short that pound because it rallied 500 pips against the yen today. But other than that, I don't really see any long-term prospects there one way or the other. Less volatile, but more interesting are things like, to me, New Zealand yen, Aussie US dollar, New Zealand US dollar. I'm looking at a lot of carry because you look at Australia, for example. 3.25% now, but probably 3.75% in November, and probably well over 4% by 6 months from now, could be at 5%. So why not get in now and take advantage of all that yield? You know, that's, and you know, I mean, I'm sure people who've been watching this program regularly are sick of me telling people to buy. I've been saying buy Aussie for the last 3,000 pips. But you know what? The story hasn't changed, so why should I change?
RBA is quite aggressive. I mean, what they're doing, they're saying what they're going to do, and they're doing it. And
there's nothing else they can do. I mean, they never had a deep economic pullback like the rest of the world did. It just didn't happen. It never materialized. And what Stevens is saying now is, well, we cut these interest rates down to historic lows because we thought the economy was really in a bad shape. And it turns out it really wasn't in bad shape. So we can't keep the rates down this low. They're going to have to start raising them up. Those rates were at 50-year lows. They can't stay down there, especially when there's no reason for it. It was done as a precaution, and that country never went into a deep recession the way the rest of the world did. So there's no reason for them to have 3% interest.
And just to wrap it up for us, Ed, please provide some guidance here. Should we be focusing on equities movement, on earnings reports, on oil, gold? What can provide some guidance?
I think earnings reports are interesting, especially for short-term traders. When Goldman Sachs reported this morning, there was a big move in the dollar. Goldman came up a little bit short, I think, of estimates, and the dollar immediately got stronger on the risk aversion trade. It was the rearing its head once again, the risk aversion.
Yes, okay. We had to mention it once.
Right, we haven't said it all day, so we have to say it at least once. I think it's in the contract. So, but there's a lot of earnings reports coming out right now today. We just had Google and several others, and it's definitely a big deal as far as short-term currency trading is concerned. So if you're a short-term trader, I would definitely be keeping an eye on U.S. earnings reports, and in addition to everything that we normally watch, central bank comments, economic indicators, etc.
It's kind of nice. It's like we have some kind of normalcy back.
It's nice. It's nice, but on the other hand, it's nice to see that the market is trending and certain currencies are actually behaving in a somewhat predictable manner. But then again, you get a guy like Fuji in Japan. He just adds a lot of spice to the mix.
Yeah.
I love that guy. He makes my life interesting.
Well, it's nice to hear. They say someone's keeping it interesting for FX players.
We got to keep it interesting. Hey, if it's not fun, then it's no fun at all. So we got to have fun with it.
Okay, great. Ed, thanks so much for your time and advice.
My pleasure. Thanks, Julie.
That was FX Educator President Ed Ponsi, and that does it for PM Exchange for Thursday. If you want to connect with our trading experts like Ed, go to ForexTVConnect.com and join our trading community. I'm Julie Sinha. Join us next time for more news and commentary right here on ForexTV.com.